Agriculture today. We are back now for our grain market update, which we do weekly at the start of every close of every Friday. I'm thinking my cattle market update here at the close of every Friday for our program, or the start of every Friday for our program. And as always, we have joining us Dan O'Brien. He is a K-State grain economist. So Dan, thank you so much for joining me today.
Thanks, Samantha. Thanks for the opportunity.
Absolutely. So we have a ton to cover here. We probably couldn't have guessed or picked out a more busy week in terms of the grain market and everything we have going on. So let's start first and foremost. We kind of previewed this last time we chatted, but the crop production report that came out and then the WASDE report, there was some major implications of those. Let's chat through them.
Well, to start first with the corn number, corn production number, the USDA did come out with a slight lowering, a moderate lowering of their corn yield figure. It was 172.5 bushels per acre in the U.S. They dropped that down to about 171.9. And you think in the bigger picture of things, that's not that much, but it's what it is. It's not an increase, and it does take the U.S. number down just a little bit lower. It was about 13.9495 billion bushels. Now it's down to 13. Now it's down 13.895, so 50 million bushels less. And as that drop in supply wound its way through the supply demand balance sheet, we now see the USDA's projection of ending stocks down to 1.17 billion bushels. As you and I have talked about a number of times in the past, we're getting closer and closer and closer down to 1 billion bushels, which, if nothing else, is at least a psychological barrier. Ending stocks to use tightened to 8.3%. The USDA did see fit to raise its projected price to $6.80. That's up a nickel from where it was before. Even raised the old crop price from last year up to $6. So tight times. From that pricing point of view, we still see here in basically mid-October, we're seeing basis levels in all of Kansas, especially in western Kansas, strengthening. So, and you just don't see that in the midst of harvest in any type of a normal year. Normally, we'd have supplies coming in, probably overwhelming local storage, and that's not the case now. We're busily trying to get hold of any grain that we can in terms of the usage industries, and so we're talking about a day yesterday where the futures went up and the basis is strengthening at the same time. So classic short crop situation. And while we're talking corn, they're planting corn down South America, and particularly concerns out of Argentina with dryness during this time frame, and a lot of the hopes of the world corn market working its way out of this tight situation that we also have in terms of global stocks rests on success coming out of South America for both the Argentine and the Brazilian corn crops. So we're hoping that, as Jeff Whitworth and others in our shop have talked about, that La Nina does diminish as we get past the first of the year, but we still have to get through it now and get those first crops down there planted and have the possibility of success and the hope that for corn and for soybeans that we'd be able to rebuild stocks and not have such I guess high cost input rationing that's occurring in some of these other industries.
Absolutely. And the corn market wasn't the only thing that was affected by these reports. Like we've illustrated the drastic change in corn. There's been similar outcomes for wheat as well, correct?
Well, yes, wheat's affected. The supply demand numbers, the production numbers came out in the September 30th annual small grains crop production summary that occurred. So we brought those numbers forward now into the current supply demand balance sheet. And we look at the wheat figures. We're looking at U.S. wheat ending stocks at 576 million bushels. And what does that mean? Well, it's a number that's That's down from 669 million the previous year. We had ending stocks to use of 34.9, basically 35% last year. With these new numbers, we're down to 30.9 actually, dropped about 34 million bushels. So with corn, again, a crop that we feed to livestock, run through ethanol plants, et cetera, we can live and tolerate 10% stocks use, or where we're at now, about 8.3. But for wheat, given the food grain aspect of it and the closeness of taking wheat as a raw product into mills right to human consumption, we get pretty worried when we're at 31%. If we get below that, then you're having a lot of concern with the United Nations and all these countries around the world in terms of gaining adequate supplies. So we're tight on the wheat market, and the USDA did, in response to what's happening now in the overall broader economy, they did come in with a projection of 775 million bushels of U.S. wheat exports, and with the idea that as the U.S. federal government and the Federal Reserve in particular raises interest rates to combat inflation. And by the way, yesterday came out with reports on the national level of some of the highest inflation we've seen in a good long time. That a lot of concerns that interest rates be raised even farther in a strong manner by the Federal Reserve, and as the U.S. dollar goes higher, that's a real disincentive for. Excuse me, as interest rates go up, the U.S. dollar tends to go higher, and you just provide a lot of disincentive for other countries to buy U.S. wheat. It just makes us more expensive relative to other suppliers. But I guess I'd come back and say, though, I hear all that talk and I see what the USDA did in terms of lowering their exports, but yet on a weekly basis, we came in with another week of 20 million bushel plus U.S. wheat exports, even with high prices and of cash prices domestically and the higher U.S. dollar. So eventually, what must be planned on from the USDA is that we'll eventually tail off in terms of our weekly exports and really start to suffer on that side. But for about 5-6 weeks now, that hasn't been the case. So I guess the tail of the tape will be when we as we keep going 1, 2, 3, 4, 5 weeks, months into the future. Do we see U.S. Kansas wheat basis levels start to run up because elevators are demanding wheat to have in place to fill trains and do whatever else? And as you and I were talking earlier, there are some issues with regard to trains and rails that we need to consider as well.
Yes, yeah, that strike potential that we thought was resolved a few weeks ago is reared its ugly head back up, and of course, with that comes very fair fear and anxiety surrounding that, especially when we think about things that are going on in the Mississippi River currently. So we're relying maybe even more so on our railway to transport some of these grains, especially here out of the Midwest. So yeah, it's something that we'll continue to watch closely for sure, but we're all hoping and rooting for it to kind of just work itself out.
I could not have said it any better in that right now again, because of dryness, the barge traffic down our central U.S. river system is constrained, slowed down at least, and we really are relying all that much more on the rail system to move grain to the Gulf or to move it around the country. In Western Kansas, we're relying increasingly on the rail system to bring in quantities of corn out of the Central Corn Belt to help, I guess, deal with our shortages from our dry weather we've had out here. So there's so much riding on the free flow of grain out of the central part of the nation into our area here in the western central and southern Great Plains, Western Corn Belt. That if we get to the place where there's the possibility of an increasing possibility of a strike happening, and which would be so disruptive to not just agriculture but a lot of things, I just would not be surprised at what type of action that governmental authorities might take to not let that happen. So to talk about rail labor politics is beyond what Dan O'Brien knows, but I would say this is a big issue and surely something to watch, and what it would do on the one hand, it would raise prices in some areas where we do have some supplies, whatever's available cash wise, it would help. But in other areas, probably in Central Corn Belt, suddenly if the rail demand, if the demand for grain on the Western Corn Belt can't be met by rails just because the trains aren't there, then that basis drops.
Sure.
So you've had some real peaks and valleys happening in the U.S. Grain markets, and people that be probably we'd be yelling in the Western Corn Belt because we can't get the grain. In the Eastern Central Corn Belt, they'd be yelling because their local prices drop so much because again their source of demand, i.e. rail to the Western Corn Belt, suddenly is stopped. So let's hope that doesn't happen, I guess, is probably the best thing to say.
Yes, absolutely. And, we were talking about wheat here, and we didn't even mention all of the chaos going on in terms of Russia deciding whether or not they want to kind of extend that trade corridor agreement. It's looking like they're not going to be willing to.
Well, there's sure a lot of positioning and saber rattling going on right now. Antonina Boriaca in our shop in KSU Ag Econ has spoken about this recently in different settings. What I've found out from listening to Antonina speak is that what some of the incentives that were given to Russia to allow that corridor to happen, to come into existence, were that they would have a free flow of their own grain out, and also that their flow of fertilizer, which again they're one of the primary, if not the primary, a seller of fertilizer products around the world, that their own flow of those two key agriculture related products would be unhindered. So they had something come out of this as well. Well, their complaint, as you read their official statement coming through official channels to the UN, apparently was that, well, this hasn't happened. So to maintain that free flow of grain out of the Ukraine, it seems that UN, other major authorities, important authorities need to address the Russian concerns. So here we're talking politics on a grain marketing oriented broadcast, but that's what this is coming down to: geopolitical, political conflict tied in with this again. I guess geopolitical confrontation happening in the Black Sea region, and it just has a lot of impact. When it does sound like when Ukraine comes out of this current situation, assuming that there's some stability, that their wheat production, latest numbers I heard, anticipate to be down about 50%. So there are long-term damages that have occurred, long intermediate term, I guess, I'd be optimistic, to Ukrainian agricultural production and their ability to move grain into the world market. But so I think in terms of world supply demand numbers, we haven't talked a lot about the specifics for world ending stocks, but they're all affected by the inability of the world to have access to the grain that's produced in those areas. So lots to watch.
Absolutely. Yeah. Hard to watch, obviously, from the standpoint of it just being markets that we're watching here, but also when you take into account kind of the humanitarian side of things as well, and you're thinking that these are producers that have been producing wheat for many, many years, just like producers here in Kansas have been producing wheat for many, many years, and that might not be a possibility for them anytime soon,
or at least not to the same degree. And the countries that's probably suffer the most in this are those that aren't as strong economically, that can't afford to pay higher prices for sharply higher prices for some of these food products, and for them these are all that much more of an acute crisis.
Absolutely. Yeah. Something to keep in mind, I guess, whenever we're discussing these things. So it's not just, we're just talking markets. It's important to remember that side of things as well, I feel like. But Dan, as always, I think we've covered everything. They had a long laundry list of things we wanted to get through today, but I think we did a great job of overviewing all of
it. Yes, as I there's so much, it just chokes me up to talk about it. Anyway, the point is that thank you, Samantha, for the opportunity to speak about this, and we'll continue to watch for this. And I think these developments in coming weeks with regard to well, the date for that issue in Russia in the Black Sea region is November 22nd. So I guess we'll find out if we go forward or not, and if not, then that'll certainly have impacts on the world markets.
Absolutely. Well, Dan, as always, I can't thank you enough for your insight and the knowledge that you supply our listeners. So thank you so much for your time.
Thanks, Samantha. Take care.
Absolutely. You as well. Once again, that was Dan O'Brien. He is our K-State grain economist joining us for this week's grain market update. We'll be back with more ahead on Agriculture Today.